Hello, welcome to this webinar on Friday from MRC Markets. Today is the 1st of March 2013. What we'll do today is look through technical analysis on Euro dollar, cable, dollar yen, dollar Swiss and gold. Just try to give some perspective into the markets, basically just review what's been happening this week and look at any interesting setups that I'll basically just be looking at on the charts. We're not making any trade calls or recommendations. You trade at your own risk. If you could please read our full disclaimer on our website www.mrcmarkets.com. For any new followers, we have 3 moving averages on each of these charts. The red one is a 55 simple moving average. The blue is a 100 simple, and the gold is a 200 simple moving average. Okay, then let's have a look at the euro dollar. This is the daily chart. Basically what we've been seeing this week is euro really is just starting to gas down. I mean, you can see that the 130 is pretty much sitting right on the 130 handle at the minute. The bears are basically just in town, really starting to press lower here into this 130 handle. You can see we start to get a nice sort of bounce up. I'll just zoom in quickly. We start to get a bounce at the 61.8% retracement, which we spoke about in last week's video, also posted up on the Twitter blog, if you check the feed there. So yeah, you can see the 61.8 was at one spot 30.61. We got a brief bounce and pop there, but we did get capped at the 100-day moving average, the blue line, and we really are just starting to press low here. It really is bear town, really. So yeah, the next sort of target really is this 200-day moving average, which is standing at the one spot 29.08 level. That's of course if it does get below these lows here, which are pretty much at the 130 handle, the January lows actually. So yeah, it's really interesting time this on euro dollar, especially on cable as well. We will have a look at cable because it's just about to break the 150 handle. So euro's the first one to press down really, but no, there's some really bearish Momo out there, and yeah, I mean, so the key sort of bull bear line really is this 130. We'll just make this line a little bit thicker actually, so you can see. Yeah, so you can see we're pretty much testing this level as we speak. This was the low of January in 2013. So yeah, it's all about this bull bear line. Will we close above or below? If it closes above, then we may start get a brief bounce up. But I wouldn't be surprised to see that 61.8% retracement hold. I mean, previous support. The amount of times we've seen these videos, previous support then acts as new resistance. It's happened a lot, and yeah, I wouldn't be surprised if we got a brief bounce. Then I reckon that 618 would hold personally, but it is looking very bearish indeed. The markets really have been tanking this week, and it's basically just try and keep perspective. And if you're looking at shorter term plays, just remember what the daily chart is telling you. It's looking very sort of head and shoulders like, really. You can see we have the left shoulder around here and then the head here. So if we did get a brief bounce, look for a sort of shoulder pattern, and then this 130 line really would be the neckline. That's of course if it does form that head and shoulders. It may just keep on tanking down towards that 200-day moving average. In terms of the shorter term time frame, so if we look at the 4-hour, then we have a trend line resistance, which has been holding quite well, but we're still quite well away from that at the minute. Of course, that's if we do bounce to this 130 level. But you can see, I mean, the 4-hour candle's pretty much sitting right on it at the minute, and we're starting to get a bit of lower wick there, so we could get a nice decent 4-hour reversal candle. But no, I mean, we really did get this sell-off this week purely on this 4-hour. If you look at that real decent spike off of the 55 bar moving average, and we've got a decent reversal candle, a nice upper wick, and a really bearish candlestick pattern there, and we really just start to tank. And yeah, I mean, that's the classic way. I mean, you can see up here as well that we had also a previous spike at this 55 bar moving average, and it reversed and we started to sell off. So that's how I've got my chart set up, and I'd highly recommend just keeping that perspective in mind and keeping that set up on your charts. Yeah, so that's basically it for the euro dollar. Let's have a look at the cable chart now. You can see it really is bear town on cable at the minute, with 35 pips away from the 150 handle. And if you flip it to the weekly chart, this is it's been the low, it's the lowest point we've been at since 2012 and 2011. We didn't get anywhere near these levels really, and yes, the last time we've been at these levels was back in 2010. So it'd be interesting to see. I mean, we had some really bad manufacturing numbers out of the UK this morning, and that's why we're getting this sell-off. And yeah, the pound really is just getting slammed off of this news. In terms, yes, I mean, it really is. I mean, for me, it's just it's all about the key ball bear line of this 150 level. That's the only line that I'm really interested in. Of course, actually, we will draw this fib up that we had up on the last week's video. It was all about the 50% retrace level. That was a key line there for Momo, and that one spot 52.70s. That's held a lot previously, but then we had that decent weekly candle close below it last week, and this week's candle has followed on, and we really have just started to tank down towards this 150 level. If we do get below the 150, which I wouldn't be surprised to see today, then it would be all about the 61.8, which previously held back in 2010, and that stands at one spot 48.53, but we're still a long way away from that at the minute. But yeah, in terms of just keeping perspective, that is the one fib that I'd have up on my charts, because all the other fibs are sort of out of play at the minute, and that key support level is at 150. See what sort of action we get at around that level for any rotation towards the downside or upside if we get a reversal. Let's have a look at dollar yen. Daily chart, nothing massively of interest still. I mean, I personally think it's been due a decent retracement, but it really is just flying towards this upside. If we zoom in a bit on this daily, you can see there's some decent reversal candles there to continue the trend towards the upside for rotation higher, towards the sort of 94 level, and that's what we're starting to do gradually. But there's no massive conviction towards upside here on these last couple of daily candles. But yeah, I mean, it really is just still an uptrend, and nothing majorly interesting for me. I'm more interested if we get a decent sort of retracement. But I mean, if you're looking for just buying the dip, then it's all about just looking at shorter term charts with a clear fib here from this recent swing low to the high, bam, straight off the 50% at 91.26. We start to rotate high, but you can see we're also getting capped at this 55 bar moving average, which is just under the 93 handle. But yeah, that's the one interesting setup, in my opinion, on this dollar yen. But in terms of the bigger perspective, it really is just flying up at the minute, and I'm only interested in sort of decent retracement. But of course, if you want to trade the shorter term time frames, I mean, look at that 1 hour price action there. Really, really clear spikes off that 50% retrace off the 91.26, and it really has started to rotate higher. So I'll just change that fib up. It's not quite correct. Yeah, so it's 91.29, but no, really clear action there. I mean, we have four candlesticks pierced that 91.29 level, and nice. I mean, what you got, a lovely 1 hour hammer there, a classic reversal pattern, and you can see that we've rotated nice off of that. Let's have a look at dollar Swiss. The only thing I'm really interested in is I mean, it was starting to bounce now, and it's all about the 50% retrace. What happens if it looks like it wants to come up and hit this level at the 0.9496? We're just above the 200-day moving average at the minute, so if we get a daily candlestick close above, then the next sort of target, in my opinion, will be that 50% level. You're looking at the shorter term time frames. Then we spoke about this in last week's video. Decent uptrend support there. It's a nice channel actually. I'll draw up an equidistant channel. I have to change. Yeah, so if you move the top there, often. In fact, we're starting to break above that uptrend channel, but it is a nice clear channel there. You can see clear opportunities for buying and selling at the bottom and the tops of the channel. But yeah, that's all I'll really be focused on this dollar Swiss chart. But that's very technical in my opinion on that 4-hour chart. And in terms of 1 hour, it's just a more zoomed in version of that channel really. But now, very technical chart, that dollar Swiss. If we look at gold, so yes, we're done for the forex now. Let's have a look at gold in terms of its daily chart. Trendline support you got there. Also, well, it's kind of like a channel as well actually, but we start to break below that channel. Although I suppose you could, now it's been broken, move it slightly wider there. Looking very heavy, especially if you zoom it to the shorter term time frames. What I'll be focusing on is this fib here, which is of course broken, but I think if you add the 78.6 to that, the 78.6% retracement, then I would have thought it's bouncing off of that. Well, in fact, it's not that technical. No, it's not. Well, if you look at the daily, then I suppose you could say it's in play, but I think it's bouncing off of just a pure support level. Yeah, the 1560. So I think we spoke about that before actually. That level rings a bell. Yes, it does ring a bell. If you zoom in, well, in fact, you just flip it to the daily. Remember, we've spoken about the 1566s a lot in these videos. You can see it's a previous support. If you look to the left of your chart here, back in the summer of 2012, it was a clear support level. Had some decent candlestick wicks there. Had a decent reversal, especially there at the end of 2012. And yeah, I remember speaking in last week's video actually. This daily reversal, I think that may have been on Friday. It was starting to reverse, and you can see we've got a nice little pop there, but we have come back down. The bears have come back in and pushed that price back down to 1566s. So it's all about today's daily candle. How will that close? If it closes above, then we'll be surprised to see it rotate higher next week to this 55-day moving average, which is around the 1651s. Okay, then that's all for today. I hope you enjoyed this video. If there's any other charts you want to have a look at next week, then have a look at our YouTube channel. Feel free to comment below the video on there, and also check out the Twitter blog as well and the feed. As we always post charts up on there, we'll post up a few of these charts today as well. And yeah, I hope you have a great end of the week trading, and I'll catch you next week. Thanks for listening.